in some ways, China does have a lot more to lose, certainly in terms of the actual tariff barriers that they can impose. But I think it's really worth highlighting that there's also a political mismatch that's very much in play. When it comes to who has an election coming up next, that is very much the U.S. and Donald Trump. We do have the U.S. midterms coming up, and a lot of these tariffs are going to hit the U.S. Farm Belt hard. The Farm Belt traditionally votes Republican, but there are a few key states, Wisconsin, for example, that could be key swing states in the election and which will be hit hard by soybean tariffs, by cotton tariffs.
But presumably Donald Trump wouldn't have made those comments yesterday if he didn't somehow feel emboldened that his base and going into the midterm elections, all of the measures that he's taken to date would be supportive.
Well, I think there's an interesting mismatch going on. His base really likes the rhetoric, his base likes the idea of punishing China, but the actual economic impacts have not really been felt yet. Even in some of the data, the PMIs really aren't showing businesses too nervous yet. You're only beginning to see the impact in, for example, the Fed statements, where businesses are beginning to say, we're not going to change our plans right now for these current projects that we're undertaking, but if we begin to see these tariffs move forward, we're going to tap the brakes on future projects.
Is it fair to say then, in order for this situation to start being resolved, you would need to see a deterioration in economic conditions and also in sentiment? So things need to get better before they get worse?
I think it is possible things will get better before they get worse. I think that certainly Republican senators are going to be watching very closely what happens in their states, what happens with agricultural prices, and the kind of pressure that puts on. So polling numbers will play a very big role in the months ahead in terms of how this gets resolved.
All right, we are just getting confirmation now, some flashes coming out saying China have applied tariffs to the same value of U.S. goods as U.S. tariffs on China goods at the same rate. So therefore, now they have completely applied that $36 billion worth of tariffs in retaliation. So we've got confirmation of that. Just wanted to flag it because there was a little bit of opaqueness about some of the responses earlier in the session. So you're saying you do expect things to get better before they get worse then?
I think you said get worse before they get better, but yes, I think there is a risk of some further deterioration. Certainly there's been a discussion of potential for tariffs on 16 billion worth of goods that is actually under public consultation right now. At the very least, we expect those to be put into place and China to respond. We would also expect at the very least some further tariffs. It's not actually our core view that we're going to see tariffs put in place on 200 to 400 billion worth of goods additionally, in large part because we're already seeing the negative impact on farmers. As we begin to see the harvests come online, as those prices stay low in the months ahead, we think that Donald Trump is going to look for a way to begin to pull back. And we also note that the negative impact on consumers will begin to be felt much more substantially if he tries to actually enact the next set of tariffs. Right now, these tariffs are really focused on intermediate goods and inputs that would eventually have an impact on consumers, but it wouldn't be immediate. Whereas if he tried to take the next step, he would target things that are very low margin and where the feed-through would be much more rapid. So things like toys and games, like furniture, like textiles, everyday goods, where consumers would really begin to feel the pain. We've seen the Trump administration really try to steer away from that. If you look at the difference between the April list and the June list of goods that were going to have tariffs put on them by the U.S. against China, the thing that was removed in June was the consumer goods. And that, for us, is really an indication that the Trump administration is acknowledging that they don't want the consumer to be hit. They're getting a lot of political play out of the rhetoric of saying that we're going to punish China, saying we're going to put these tariffs on, but they also know that there will be an economic impact if they do so.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.